Okay, so let me move quite quickly through this because you probably wouldn't be here if you didn't know something about this issue in this sector. Um, this is how we see the world of climate change as an issue area. The imperative here is we need to figure out how to tackle climate change. I'm one of the optimistic people who thinks that this is a solvable problem and something we can make a difference around. And I've spent the last 20 years trying to build solutions from that perspective. And the result of that has been hundreds of millions of tons from projects I've been involved in that haven't ended up in the atmosphere. So this is a viable thesis. This is something that we can do. We know that if we don't limit climate change greenhouse gas emissions to 2 degrees, we're over 1 degree now of warming already, we start to get to what's called irreversible climate change. Unfortunately, large corporations have, in the last 2 or 3 years, really recognized that that's something that they want to take seriously as well. So we're in good company. We're in the company of over $100 trillion of assets under management of companies that have committed to go net zero or carbon neutral. And that mandate means cutting their own emissions wherever they can, shifting to electric load for their heating systems, reducing the amount of flying that they do. But very few companies in the world can make dramatic changes in their emissions in the short term. So to get to net zero, they can maybe make a 5 or 10% reductions in their own emissions. And then what they need to achieve the balance of that is carbon credits. And ultimately, all a carbon credit is an investment in an emissions reduction somewhere else in the world where it costs lower than it costs inside the company. A company, a well-run company in the manufacturing and production space may spend $50 to $100 per ton to get its own emissions reductions internally. At some point, if they can get those emissions reductions by purchasing investments in reforestation or mangrove protection, it's a more efficient use of capital for them to invest there. So, the carbon credit thesis is a carbon balance sheet argument. And it says that if we want to move as quickly as possible to stabilizing, we invest in what we can do internally in companies, and then we invest in some large-scale emissions reductions outside the company. And this slide just gives a sense of why we're focused on nature-based solutions. We tend to focus on emissions from fossil fuels in the area in orange here, which is 60–70% of the emissions. But somewhere around 20% of emissions comes from land use change, from greenhouse gas emissions, from methane, from carbon that comes from that land use change. And we tend to ignore that. We tend to think about cement plants, and we tend to think about oil and gas refineries. No single sector or source of emissions is as large as land use change. So every year, deforestation and land degradation produces 20% of global emissions. And we think we can deploy capital both into preventing that from happening in the first place by protecting land, and more importantly for our current work, to restoring land that's been heavily degraded over the last 200 years of industrial activity. So again, where do the overall gases come from? We know 65% of CO2 comes from fossil fuel industry, but about 11% comes from forestry and land use change. And remember as well that when we talk about greenhouse gases, we talk a lot about methane, and methane's a very important greenhouse gas in the context of land use change and mangrove protection and a whole range of other emissions. And again, we can see on the right-hand side, those emissions come 25% from electricity and heat production across all sectors, 24% from agricultural, forestry, and land use change. So again, while lots of people are focusing on technology solutions, our approach is to say, well, how can we deploy capital to prevent and reverse this degradation of natural systems? This graphic gives you a sense of what that 2-degree reduction requirement is. The line from left to right at the top to 2030 shows what happens if we do nothing. We rise to about 55 billion tons of emissions annually. What we believe we need to do to get to a kind of minimum stabilization is reduce those emissions between 12 and 15 billion tons by 2030, in the next 8 years. And that sounds like a huge challenge, but we already know from other research that there's 8 to 12 billion tons of carbon credits, up to 80% of which are going to come from nature-based solutions. And most of those opportunities are in large developing countries less than 10 developing countries that represent the majority of those emissions. So the challenge, if we want to go hard at this, is finding up to 20 gigabytes of emissions reductions. We think 10 to 12 of those gigatons of those emissions reductions can come from nature-based solutions, which I'll talk about a little bit more in a moment. And we know who the buyers are of this. So there are 104 companies that have made net zero commitments, over $1.4 trillion of market cap just within that group, over $100 trillion of market cap across the entire sector that have made these kinds of commitments. And let me just show you briefly. It's we can circulate this diagram afterwards, but this diagram has a lot of information in it. But the key information here is the emissions of carbon into the atmosphere from industrial activity. This is carbon, not carbon dioxide, but the emissions of carbon is about 8 gigatons annually, and that translates into about 55 gigatons of carbon dioxide when you upgrade it that way. So that's a big number. We know when we look at the atmosphere, there's close to 600 gigatons of carbon in the atmosphere. But we also know when we look at the surface of the ocean, there's 900 gigatons of carbon in the surface of the ocean. There's something between 450 and 650 gigatons of carbon in vegetation on the planet. There's 1,500 to 2,000 gigatons of carbon just in soils. So our approach is to say, well, why don't we leverage nature's systems to enhance the amount of carbon they take out of the atmosphere? Very small changes in how we manage vegetation globally. So in this case, about 1% change in vegetation globally solves this problem of greenhouse gas emissions, all greenhouse gas emissions from human activity. We make it sound simple, but what that means is preventing global deforestation, replanting large areas of land. And what we've discovered and where we focus is we can do that kind of work for between $10 and $20 a ton when the prevailing carbon prices are $30 to $50 a ton if you look at places like British Columbia. So what does that mean in terms of nature-based solutions? Well, we focus on 4 areas: avoided deforestation projects. So taking land that would otherwise be a forestry project and converting it into a conservancy. We did 6.4 million hectares in British Columbia with my previous company. We protected 300,000 hectares in the Democratic Republic of Congo. We're looking in one country at 2.2 million hectares of conservation potential. So that's one project type, and you're basically, very simply, paying people to not cut the trees down. Our restoration and reforestation projects, which we're putting a lot of our effort at the moment in Sierra Leone, we have 60,000 hectares where the land was degraded for plantations. We're removing all the old dead wood, the broken down palm oil plantations, and instead investing in restoration of native species. And again, we can do that for under $20 a ton. And we're right in the midst of a review process with 16 different investors who will help us make that investment and deploy it and create a 50-year carbon project from that replanting effort. We're very interested in what's called blue carbon projects. Marine ecosystems. Marine ecosystems have productivity of almost any ecosystem in the world. So they can absorb 15 to 20 tons per hectare. And we're looking at very large areas of restoration work in the state of Yucatan in Mexico, where we've got 25,000 hectares. Initially up to 10,000 hectares in Sierra Leone. We're looking at entire coastline of countries like Suriname to see what we can do there. And in those cases, it may just be re-wetting and reflooding those areas with tidal flows that help restore those project areas and making the capital investment there. And then we also look at agricultural projects where we can shift to regenerative agriculture. And in each cases where there's restoration, we're funding that capital investment in order to do that. Ultimately, the reason we choose nature-based solutions is very, very simple. It's the highest volume of potential projects, so 65 to 85% of the total volume of projects. They're typically the lowest cost projects. to produce, and they're the largest scale projects. So you can have a project, a single site that produces 3 to 5 million tons a year from conservation. We have project sites where we'll produce 1 million to 2 million tons a year just from restoration work. So it's not to diss or badmouth technology projects. They're all an important part of the solution, but we focused on these large jurisdictional projects. Very quickly then, in terms of how credits are produced, you establish land title, you have to establish free, prior, informed consent. You have third parties evaluate that the landholder and lease agreements are fair and reasonable. We develop a project description, which describes the land title, the area, the type of intervention. We go out to public comment. We produce what's really like a reserve statement. And then that's third party validated and verified by one of the assurance agencies. Then we initiate the project. We either protect the trees or we plant them. And then we, from there, what we do is each year we come back and verify that the emissions reductions are real, additional, and have been verified. And at the end of that process, we issue a report which says this is the volume of tons that were produced within that year. So it's all underpinned by third-party validation and verification. And there's a sort of complex chain of custody that gets us, to the stage where we can sell those tons and sell those products. At the moment, the demand in the market is so strong that we're able to pre-sell and secure pre-purchase financing for these projects. So in some cases, our investment cost will be potentially below $10 a ton to produce the projects. We'll fund that with pre-purchase agreements from our buyers, and those are the kinds of negotiations we're in at the moment. Once we funded the project development, in the case of our Sierra Leone project, which is 25,000 hectares, we need to invest about $17 million to restore that land. That land will then produce 10 to 12 tons per hectare for up to 50 years. So that capex up front produces for investors a very strong annuity stream, a very strong revenue stream that can last not just 5 or 10 years, but 30 years within the crediting period. Our DRC project, which I was involved in setting up, produces 3 million tons a year. They're probably selling those tons now. The buyer of that project is selling those tons at $10 per ton. The upfront investment into that project was less than $5 million. Kind of places where we work, and I'll just conclude with this and open up for questions. The countries that have the highest potential for nature-based solutions are the countries that have tropical regions where the growth rates are fastest and the land costs are lowest. There's an order of magnitude difference between how fast trees grow in Canada and how fast they grow in tropical areas. So we tend to focus on those regions. We currently have in Sierra Leone 60,000 hectares of restoration, so on the west coast of Africa. We're also starting to work in Liberia and Guinea to take old degraded land for plantations and re-establish rainforest cover. We have a project in the state of Yucatan where we're doing mangrove restoration in conjunction with the state governor. We're working in Guyana and Suriname on mangrove and forestry related projects as well. So ultimately our differentiator as a company is we're not a streamer, we're not a royalty company, we're an owner and operator of these projects. We make the equity investments into the projects ourselves to secure the rights. We work directly with governments and very large landowners to secure those rights. We become the investment partner and the equity owner of the carbon revenue streams. And then we deploy teams in country to evaluate and complete those projects. I'm going to stop there and just take a moment for some questions, since we've got a good audience here now, and I did promise that we would do that. So I'll see that. So I'll answer Gabriella's question first. You talked about a project of mangrove restoration in the Yucatan Peninsula. It's actually Yucatan State, not the peninsula. The site area that we're looking at initially is near the town of Sisal, so just down to the coast from Merida. And we have 25,000 hectares in a number of different contiguous blocks within the coast there. And basically what's happened with those project areas is the land has been, the mangroves have degraded because they built roads along the waterfront. Those roads cut off tidal supplies, and what that means is the salination levels increase in the forests, and what we need to do is reestablish those tidal flows and replant the credits. So we have 5 or 6 different sites in Yucatan state, a partnership with the state government, and we'll initiate the first projects near Sisal. We'll be making announcements about that in March. Cole asked, can you elaborate on which organizations are actually providing the credits? Cole, can you just clarify whether you mean who's buying the credits, or whether that's the organization that supports the verification?
The verification. So who?
Sorry, that was Grayson asked that question.
Oh yeah. So my question was, who is actually providing the credits?
Cole, I'll answer both versions of that question then. So
great.
The credits are issued and validated by the credits are issued and validated by organizations like Gold Standard and Vera, which are independent third-party organizations which control and manage the protocols and the registries. Most of our projects are Vera projects because they've done the largest number globally. The issuance of those tons, it happens through a static registry. They get managed and retired on behalf of the buyers. In terms of the buyers who are actually purchasing the credits, our pipeline of buyers includes some of the largest trading houses in the world, like Trafigura and Hartree and Glencore. We're also talking to very large final emitters that need to purchase tons directly, and both in the technology sector and in the oil and gas sector and the resource sector in general, which is seeing the most pressure. So our buyers are companies that are buying directly from us to meet their own offset obligations. Grayson has asked, did you say KLX has started selling credits and generating revenue already? We do have a small amount of revenue from our operations in Guyana, but we're at this stage, as we announced just before Christmas, we're finalizing a bidding process to establish pre-purchase agreements, and we expect to conclude that in Q1. And that pre-purchase will allow us to recognize revenue, which we can then use to invest into project development costs and leverage that against our equity. So we expect to be able to announce that in Q1 or early Q2. Some great questions coming in here. RP, other partnerships with government under an ITMO type agreement. So for everyone else's benefit, ITMOs are tradable permits within the UN system. And you can, at the moment, there's an agreement within the Paris Accord that allows countries to trade credits between them and to meet their obligations. So Germany or Switzerland could buy credits from a developing country to meet their obligations. At the moment, that system isn't fully set up and established yet. There are some early transactions, but very early days. Any of our agreements would manage what's called corresponding adjustments. So if we produce credits and sell them to a large oil and gas company or a technology company, the government isn't then allowed to take credit for those credits and also double sell them to Germany or Switzerland or somebody else. And that's part of the reason we work with national governments as well, is to make sure we don't have any of those double counting issues. Is there an insurance offering for the VCUs provided by project developers? The insurance mechanism that exists at the moment is the registries create a buffer pool of replacement tons. So every project developer takes a portion of their tons and puts them into the buffer pool. Those buffer pools, if there's a project reversal or failure, like the wildfires in California last year, it's a self-insurance mechanism. So those buffer tons provide replacement tons in case there's a reversal. There are very large global insurance and reinsurance companies looking at providing insurance policies for VCUs. I haven't seen a viable insurance policy yet for that. There are insurance policies for things like project failure risk. Another question from David. What are the top technology firms involved in this project in the US and Canada? The technology platforms here that I think are actually interesting and viable has been simplifying and mechanizing and digitizing the validation and verification and monitoring processes. So there's a number of companies that are getting into this space that are trying to produce low-cost solutions for carbon credit generation. At the moment, most of that is kind of manual labor on the ground to measure trees. So obviously satellite data can help a lot with that. There's Pachama is one of the big players, Silvera, Salo AI just got acquired by Planet, which is one of the big satellite companies. In Canada, Earth Daily Analytics, and I've been an advisor for them for a number of years, is developing a new satellite array that provides global monitoring of biomass and agricultural systems. In the UK, Geotree is probably the front runner for technology solutions for lowering the cost of doing the validation and verification work. So some really interesting projects. There's been a lot of interest in blockchain and blockchain applications to carbon credits. I haven't seen a solution in blockchain yet that solves any real problems. The biggest issue that buyers have is making sure that the credits are only sold once. So the static registries that the protocol verifiers like Vera manage are the safest solution because you can only retire a ton once. The challenge with creating a fungible commodity in blockchain for credits is it will create a perceived risk that those credits could be double sold. In most cases, these credits aren't being traded and flipped and used multiple times. In most cases, a large final buyer will buy those credits and retire them against their offset obligations. So you don't need that. At this stage, you don't need that high level of fungibility. So I'm not seeing much value from blockchain at this stage. Hui Lam, your question, average size of investment per project and projected return on investment on an annual basis. Our investment into 25,000 hectares in Sierra Leone would be about $17 million till the project starts producing its own cash flow. We're modeling about 18% IRR on that project. The IRR, if you use a 10% discount rate, that kind of kills, damages your IRR, but we still think 18% IRR on a project that's producing an annuity for 30 years is pretty good. But that $17 million investment over the lifespan of the project represents about $700 million of cumulative revenue. And the way we're structuring our contracts, if we think about our return on equity, our investment into that project will be somewhere around $2 million. The balance of the investment comes from pre-purchases from offtake agreements. So if someone puts in $4 million, they get paid back at, let's say, $15 a ton until their money is repaid. So our model in terms of return on equity is, thousands of percent return on equity. At the project level, the IRR is still, high teens, low 20%. But from the perspective of a long-term investment from an annuity, an 18% IRR is very, very attractive. Sandy's question, are you currently working with any sustainable resorts? I have done in the past. And we can take it offline and talk about some of the hotel and resort chains that we've worked with. We've worked with large local companies like Harbour Air Seaplanes to offset air emissions. We work with a hotel chain in Victoria or hotel in Victoria to make them carbon neutral. We can do that. Typically, most of our customers are very large corporates, but we do have an option to work with smaller regional players to make a pre-investment into these project sites and then receive the tons from that investment. So happy to follow up on that separately.
Thanks, James. I think that's about it for questions. One more that we have here. What is the biggest challenge you're facing in the industry now? So I'll just mute myself and let you answer that, and then we'll wrap it up.
I would say in the industry itself, the biggest challenges we face is actually finding qualified personnel who've developed projects in the past. So we've done a lot of work. The three parties we work with are some of the most experienced carbon credit providers in the world. Technical teams. They're equity owners in our businesses. They're very strong partners. As we grow and scale, everyone is challenged by finding people with this depth of experience to come into the project. So that's a concern and a challenge. So we're trying to find some of the best people in the world. From the perspective of the markets, we spend a lot of time, working with investors so they understand what it is we're trying to do. This is still an unfamiliar sector and a difficult overall market in the public markets. So we've been committed as a company to say, look, if we just promised you that one day someone will buy our credits and we produce millions of tons and just hold on to them, that's not good enough at this stage. We've been very focused on completing our first trade and making our first sale or offtake, because then we can show that we're a company that can go upstream, secure land assets, do the technical work, and pre-sell these projects, put cash on our balance sheet before we've even, in some cases, before we've even done most of the planting work. So the challenge for us is proving that thesis out. We're going to prove that out in this quarter. We're very close to being able to make announcements. We've talked about, made public what our strategy is in this space. And setting aside that the public markets are down and markets in general are down, one of the interesting things is that both the tech sector, companies like Amazon, and also the oil and gas sector have more pressure than ever before to demonstrate that they can achieve net zero and make these commitments. So our interest in our product pipeline has been unprecedented in my 20 years in this space. We have literally groups fighting over who can be the first to invest in our projects, and that's a very positive sign. Yeah, so Tom.
Minimum investments.
I mean, minimum investments at the project level are in the at the $1 to $2 million level. We're a public company, so anyone could buy our stock. We will be raising more equity later in the year on a prospectus basis, so we expect to see that happen later. Our target partners, I think this question is asking which companies will need lots of credits over time. In the tech sector, I'd say the biggest footprint is coming from the cloud, from data centers, which are growing by 14% annually from some of the most recent figures I've seen. So companies like Google and Amazon and Apple are spending a huge amount of money trying to secure renewable energy for their data centers. But there's a balance of the tons that they can't offset. They can't secure from renewable energy, so they have very large scale demand. The companies that have the most scrutiny of their emissions are the oil and gas sector and then the aviation industry. So they feel the most pressure, I think, to do these kinds of things. And then another question from RP. Any chance you'll explore other carbon sequestration projects like biochar? Yeah, absolutely. We're looking at bioenergy options. We're looking at biochar as the protocol develops and advances from that. We think there's some really interesting opportunities there. We also look at blended approaches where we might combine some aspects of a cook stove project with a reforestation project to reduce deforestation pressure. We're also looking at sort of frontier blue carbon projects like kelp and seaweed. Anywhere, biochar I really like because you can just you can get to very large scale with some of those projects. And as the protocols stabilize, I think there'll be some interesting opportunities there.
Hey folks, well, thank you again for attending. I wanted to let you remind you there will be a couple of other events coming up. On February the 16th, we will be doing a project update on all of Klimat X's projects in the various jurisdictions. So please stand by for a registration link for that from our website. And also on March 16th, we'll be doing a presentation that's going to be really interesting about how to finance a carbon credit project that will explain a little more on the business that we're in. So please feel free to send any questions to James' email. He's put it in the chat, which is very generous and kind of him. Thank you for taking the time with us today. And we hope that this has shed a light on a burgeoning industry that's ever expanding. Thanks so much again, and have a wonderful day, folks.